I think you got an email from me. Yep. Yeah. Okay. It was a reminder to the students. Let's get going then. Yeah. Let's get started with the first question. So you see, the first question you're going to expect is from control accounts. Yeah. What I just gone through, I changed the color of my pen. So expecting little answer from you, and also I will be giving my answers. Yeah. So it's a both way doing. Okay. Number one question, task 1 for 10 marks. This task is about using control accounts, a receivables ledger control account. Natalia, what is a control account again? It's a combination of all the individual accounts, right? Yeah.
Yes. Yeah.
Yep. Brilliant. It's shown in the general ledger. Okay. So a receivables ledger control account balance shown in the general ledger. And which one of the following is correct in relation to the receivables ledger control account? So let me read all these items. Think what is the best answer, and we'll answer that. A receivable ledger control account enables quick identification of the total amount owed to the business by the customer. Ah, that's so good, isn't it? Do you understand what this means? Receivables ledger control account enables quick identification, total amount owed to the business by the customers. Like how much is your credit card? That sounds a very good answer to me. It is an answer to me, but let's read the others. Are those good or not? A receivable ledger control account enables quick identification of an amount owed by a specific. Do you see the word here? I highlight for you. Specific customer is a individual account. Am I understood? So this is not a control account. So this is not the answer. Am I understood? Yeah. That's why this is not the answer. Receivables control account should always be produced by the same person who produced the subsidiary. Nah, not like that. A receivables control account enables discrepancies between the bank and subsidiary. Nah. So this is the best answer. Do you agree with me? Yeah. Yeah. Is identification of the total amount owed by customer, how much they got to pay us. Okay, then straight into the VAT control. I think you can do that VAT control. Can you not? I gave you the pro forma. Yeah, you got to help me in doing this VAT control. Let's read it first. You work in the accounts department of Arnolia Limited. Your manager has run a report which shows a credit balance on the VAT control account at the end is this. Yeah, at the end, remember. You see, at the end means when we do VAT control account and credit balance means balance BD here. Am I understood? Yeah, credit at the end. That is that. The credit balance at the end of March, and that is end of April. And we're going to do April. Dates are very important in accounting. Month, date, yeah, year start, year end. So we're going to do accounting for April. Ah, brilliant. They gave you a pro forma, but I'm going to test your knowledge. If it is for April, and they said end of April 3220. So that is 3220 balance. And then at the end of March means beginning of April. Do you understand me? Yeah, that's balance BD. Balance BD. And it's a credit balance as well. So 8,300 is on this side. Because this is April account. Anything coming from the March is balance BD opening. And that's credit side. And anything at the month end goes at the bottom. That's also the credit. So if it's balance BD here, balance CD should be there. Now, some of the items are given. Help me. Which one should be on the debit side? Which one is the credit side? I taught you all the income. Where did I write? All the income on the credit side, isn't it? And where all the expenses are on the debit side. So tell me, sales on the VAT account.
Sales,
you got to
credit.
Well done. Credit. Purchases.
Debit.
Debit. Sales return.
Debit.
Debit. Purchase return. Yeah, purchase return. Yeah. Opposite of purchase. Yeah, opposite of purchase. If purchase debit, purchase return is credit. Yeah.
Yeah, credit. Yeah.
Yeah, well done. Discount allowed. Income or expense thing first. Then Yeah.
Income credit.
Let's try. But discount allowed is an expense, yeah?
Allowed, not received. Yeah.
So debit, yeah?
A debit, yeah. Discount received credit.
Credit. VAT on cash sales, whether cash or credit, both are income credit, yeah? Payment made. You see the payment, yeah? When we pay them, our liability goes down.
Yeah.
Yeah, so it's on the debit side. Am I understood? Debit. Holly has joined again. Hi, Holly. Do you hear me? Holly?
Hello.
Hi, welcome back. Okay, you took little time. We are on to
Sorry.
question number 1. So the answer for A is first one, and B is you got to do it now. We identified. Can you please figure it out? They have done this part. Look at the screen, please. Yeah, opening balance BD. This came from March. This came from March, and this is CD. Credit, they said CD becomes automatically BD. Am I understood? Yeah. Balance BD 3220. You just need to put the figures, how easy it is to get the marks. Yeah. Can you please put those items in the box? Let me help you. You do, I do. Yeah. You do on your paper. I do here. I said income VAT on the credit side, expense VAT on the debit side, or whatever makes your liability down on the debit side, whatever makes your VAT liability up on the credit side. So I have a sales VAT, I saw it. There is a purchase return. There's a discount received, and there's a cash sales I saw. All these should be on the credit side. And on the debit side, there's a purchase. There's a sales return, no? Sales return is a reduction in sales, is a kind of expense. There is a discount allowed, which is an expense. And we paid the VAT, so it goes down to the bank. I have got the question in front of me. I'm writing from there. Just 2200 140. Sales return 20 and bank is 7,600. Boom, boom. Yeah, does it look like this? Yeah. Holly, although you joined a little late, but this is how we do VAT control account. Yeah, we're still liable by 3,222 HMRC. It's just choose and pick, get your marks, move on. Nice and easy, yeah? Shall we go to the next bit? Next bit, they give you a receivables ledger control account. Control account. It's a T account, debit side and credit side on the screen, please. Yeah. So can you see popular items, balance BD and sales on the debit side, and the sales return, bank, discount allowed, could be a recoverable debt, could be contra on the credit side. So what is your balance CDBD? I give you, I know very often I take my TikTok. It's not the social media TikTok on the screen. I take my, what do you call it? This, a clock. I give you 1 minute to give me this answer. What is the balance? It's just you need to take your calculator up and do the calculations, don't you? Yeah. Can we do that? 847. Give 70. Give me an answer if you got it. 2,000. 60,470. No, 60,470. And from that, you need to take away 920 minus 29,860 minus 940. 28,750. Is that what you got? How many minutes? Oh, 40 seconds. You got to be confident, you see. Nice and easy. We have learned it. So basically, how much? Come on. 28,750. 28,750. Now they done 28,750 or 70 or much? 50, yeah. 750. That's basically the balancing figure you need to put in it. Or if you meant to do proper way, you should have done the total. Get the total, write the same total here, take your old items. That's your balance sheet. Easy peasy, yeah? Good. That's the end of question task number 1. Shall we check our answers? Let's check our answers. Yeah, let's check our answers. Yeah, What is a receivables? It's a quick identification, total amount owed by the customers to the business. A VAT control account, the easiest in the world. I said income VAT, you write on the credit side, an expense VAT, or a liability goes down on the debit side. A liability goes up on the credit side. And yeah, all are correct. And how about this one? Even easier. Sweet and simple, yeah? Shall we move to the next one? What you can expect in the question number 2? I mean, task number 2. A little more control account, a bit of reconciliation. Let's go to the next page. Let's go to the next page. And let me read it for you, and you think of the answers. This task for 10 marks is about reconciling control accounts. The balance on the payables ledger control account will appear in the year-end trial balance. It is important to reconcile these to the payables ledger. One more quick talkie. You see, this is a balance, yeah, like balance BD, 28,750, receivables balance BD. Where do you take it? From from ledger account, you take it to the trial balance. Do you remember? From ledger account, you take it to the trial balance, the balance BD, the bottom balance BD, whether it's a receivables, payables, rent account, any account, you bring it to the trial balance. So this is a true word. They said balance on the payables ledger control account will appear in the year-end trial balance. It is important to reconcile this to the payables ledger. Guys, you see, I'd like to highlight 2 things: payables ledger and payables ledger control account are very important. Many students do this mistake. Payables ledger is your subsidiary. Write it down. Subsidiary or individual. When they say payables ledger or receivables ledger, it's your individual account. Many students, they don't understand. They tend to do mistake. It's one person. So 2, 3, 4, 5 payables ledger, you add up together, put in the control account, right? Yeah, good. Yeah, like Allison, Camellia, Britannia, you sold goods on credit. Those are your receivables account. And if you're buying from them or anybody else, those are your payables account. When you add it up together, right in one account, control account. Now, what is the question? Identify one of the following statement, only one being asked, is the reason for completing this. Why we do reconciliation? There are 4 options. 1, 2, 3, 4. Let's read. Try to find out the best one for reconciliation. What do you do? The first one, they say payables ledger is always more accurate than payable ledger control account. No, nothing like that. Individual and control account, one of these is more accurate. It's nothing like that. This is not our answer. No. Then they said errors in a payables ledger or payables ledger control account can be identified and corrected. Very good answer. This can be answered. You see, if you do any mistake in your individual account, in your control account, when you're going to do the reconciliation, it will not match. Yeah, it will give discrepancy. So this is the best answer. But let's read the other 2. Here's the control account deleted once it has been reconciled. Nah, never like that. Nothing like that. Any error can be identified and included in the what? Suspense account. Not actually. We look for the errors, but in the receivables or payables ledger or in the individual. This is the best answer. Yep, agree. Well done. What is the next one? You work in the accounts department of POW Limited. You have been asked to reconcile the balance on the payables ledger control account and reconcile. Did you remember the balance? Yeah, all the individual balance should agree with the control account balance. Yeah, that is that basically. So what they gave you, the following suppliers. Suppliers, individual account. Yeah, like pallet, then HMRC, cable, brake, cable, nice, rustic, lost. Yeah, they are your individual subsidiary account, payables ledger. And there's some reference given. Balance owed, these are important, and days, forget about it. What is it? This is a list of your supplier, your payables. Yeah, like you're liable to pallet by 29,000 this much and this much, this much. When you should add up, you need to check how much is the total liability for the reconciliation. Let's see what is the question. If the payables ledger control account reconciles with the payables ledger, what will be the balance? How do you do this? Do you think this is very difficult to do? What is the question you need to figure it out? Like, they're asking you what is the payables ledger control account balance should be. The balance should be the addition of, hold on, addition of all this. If it, whatever is the addition, that is the answer here. Can you please quickly do it on your calculator? I gave you 1 minute to do that. Where is my TikTok? 1 minute. I do on my calculator here. I got an answer already.
Yeah.
How much is that, Natalia?
58,563.
I agree with you, and it's less than a minute. Yeah. Well done. We're well ahead of the time. So that is that 58.5. That's what I got as well. Oh, where is my calculator? Oh my gosh. You know, I'm using a green screen. That's why it disappears. Yeah, here it is. 58,563. After the next break, I'm going to bring my big calculator, the accounting calculator. Never use your phone. I'm telling you, don't use your phone even at home. You need to get used to in your exam condition. Especially Holly, you see, you will definitely pass, Holly. Don't worry. Yeah, we are there. We are here to help you. And so many students like you. And failing, to be honest, is no shame, nothing wrong. But yeah, how to pass you should look for, how to tackle where I'm doing mistake. You can ask your tutor once, twice, 3 times, 10 times. Yeah. When I was a student back in 2000, many years ago, I had a teacher, my ACCA teacher, Steve Lumby, as a British white young man. He was old that time anyway. My God, he's such a dedicated guy. I used to sit at the backbencher. I was a backbencher. So Anglia Ruskin University is my university. So, and when I raised my hand, the teacher rushed to me at the end and showed me hands-on. This is how this is. Does it make sense, Elias? If I know Mr. Lumby, tell me one more time. He doesn't mind. I don't mind either. You see, you ask me 10 times. Yeah, get it right here. Do well in the exam. Okay, so that is that. Can we look at the next sentence here? Interesting. The balance on payable control. Guys, girls, you see, this total came from where? Individual account. Am I understood? This total came from individual account. Right? Like A, B, C, D, you added up together. You said, my payables, I owe them 58,563. But when you done the control account, you found, well done. This is not well done. This is 57. There's a discrepancy. Whatever is the question, get the discrepancy first. 58,563 minus 57,930. You got a figure, and that is the next answer, basically. That is what being asked in the next question. The payables ledger control account is 633. Is it more or less? You need to tell me. Think and tell me. They said control account. What is the control account figure? 57. What is the individual? 58. So control account figure is less. Am I understood? Yeah, well done. So that is the answer. Yeah. Boom. That's how you do. Let me ask you one question, you see, that can come in the exam. I'd like to, before I ask the question, you draw the picture. Trade payables control account. So when you have done trade payables control account and it's a balance BD, you got this one, 57,930. Yeah. And when doing individual, that is like this 58. Why it is? Why your control account is less? Why? You need to think what items goes in this figure in the boxes. Is a little it is little right. Like, isn't it balance BDU right? The answer is yes. Isn't it credit purchases you right? The answer is yes. So why this balance is lower compared to this? Maybe you have written less purchase here. I understood. Maybe you have written less purchase. If you write more purchases, 57 will be more. It'll like be 58. Think the other way around. Mostly you write bank here, then purchase return, then discount received. Maybe you have written extra, something extra here. Here you have written less purchase. Here you have written more, any one of these or some of this. Because of that, your balance is going down. Yeah. Now, obviously, this is not a 5 minutes topic to deal with, but that is the answer, and that's the concept. Maybe later on when you go through, I have many videos on receivables, payables. You can check it out, or you can reach me. Okay, moving into the true-false answers. True-false answers. At Zen Limited Payables Ledger Control Account showed balance this, individual balance. The one I showed you, they're asking, I believe so. But this is slightly different figures, yeah? Control account is higher now, and individual ledgers are lower now. Control account is 67, but individual is 65. Identify whether of each of the following explains the difference between the two balances. 1, 2, 3, 4, 5. Like, why? Is it the reason? Is it the reason of this difference, or is it not the reason? Not the reason. And is it the reason? Let's read and talk. A purchase from a new supplier was missed from the list of individual. Which one is lower, guys and girls? Individual is lower. Yeah. What does a purchase makes in a payables account? Purchase makes your liability high. So in your individual, any of these purchases might be missing, they're saying. Any of the purchases is missing. And that's true, isn't it? That is true. I show you. We can go back to the same picture here, little more better. Like, this is control, but individual. Your individual ledgers are, the total is lower. Why it is lower? Maybe you forgot to write a purchase, and that is being said here. And the answer is yes, you're right. That can be a reason of the difference, yeah? Individual. Because your individual is lower. I repeat, your individual is lower compared to your control account. Next one, a purchase invoice has been recorded twice in the purchase ledger. If you record purchase ledger twice, what is going to make your liability up? Can it be the reason? It cannot. It says purchase ledger means individual again. Individual. Your purchase is already low. So if you have written it twice, that's a mistake, but that doesn't occur this. Yep. This is not the answer. Why this is not the answer? It should have made your individual higher, but our individual is lower anyway. Is it getting a little deep? Is it little challenging? Keep it simple. They're saying purchase invoice recorded twice in the individual. If you recorded twice, it should be higher, but our individual is lower. So this is not the reason. A cash purchase not been recorded. Remember, cash sales and cash purchases never affect your receivables and payables. I repeat, cash purchase doesn't affect your payables. Yeah, it goes into the cash book. It doesn't. So this is not the answer either. That was straight away. Next one, a transposition error was made when recording a purchase invoice in the purchase day book. Again, it is nothing to do with the our account here. A transposition error of original entry. It changed the figure, recording the purchase invoice. So it's not affecting here. Last one, discount received from a supplier had been recorded twice. Discount receipt, which side do you record? Discount receipt makes it down. Your payables down. And they said twice. That can be a reason. Because they've written twice, so it's down compared to this. Well done. That's how you do. Do we have more of it? No. Shall we check the answers? Just check the answers. Very simple question. Yeah, identified and corrected. That was our answer. 58,563 was our answer. 633 less was right. This is also right. Any explanation? No, whatever I have explained, that is that. Let's move to the next one. Let's move to the next one. I'll give you a good break. Don't worry about it. Yeah, once we finish halfway through. A payment method is an interesting one. Very simple, but interesting one. And bit of bank reconciliation. Now, I didn't speak much about bank reconciliation, but throughout the question, we will talk about, because we're going to get bank reconciliation in the next question as well. So 3 and 4, all about payment method and bank reconciliation. Let me go to my next question. Question number 3. Before I read any of this, let's talk about these items on the screen. Banks automated clearing system. When you get paid directly into the bank, maybe your salary, mostly the salary we get through banks or online transfer. Cash and coin or over the counter when you pay. CHAPS is an electronic, but it's for bigger amount. Do you remember? Yeah, it's for bigger amount. Credit card, when you pay on credit, don't pay then and there. Debit card, it's not credit, money available, but still it's a electronic, a plastic, using the through plastic card. Direct debit and standing order. Both of these are bank, all of these are bank apart from the cash amount. But direct debit can vary. The amount, vary. That is the keyword, vary. Like you have a EE mobile contract or Vodafone or O2, £30 per month or £50 per month. But if you exit your data or anything else, you're gonna get charged more. That's your direct debit, yeah? But standing order is fixed. We initiate it, fixed, like gas bill, yeah, or mortgages. So those are standing order, and that's maybe £200 every month fixed, yeah? So if you're happy with this, let's read what they say. Insert one payment method, blah, blah, 1, 2, 3, 4. Basically, they are describing one of these. So let me read first one, think, and let me know what is the answer. A payment made by card. So only these two is available, which may be paid off in part of the end of the month. Did you see? They never said credit. They never say like cash or then and there. They said part or paid off. Part at the end of the month. Do you with the debit card? You just on the debit card you paid then and there, don't you? Or how about, and then what is the, obviously credit card is left over. Credit card, yeah, at the end of the month we settle. Number 2, I'm expecting these answers from you. A payment method used to make the same regular payment to the bank account of a third party. I gave you same, like it doesn't vary. What do you think is the answer? It's the same amount, like I instructed my bank to pay a third party. Yeah,
And in order.
Yeah, Natalia, you agree? Standing order, SO, 100%. A method of regular payments, the bank third party can vary. So this vary, I already written it. So DD, direct debit. A payment method is a low value transaction which must be counted. What you can count being banked? What can you count? Cash. Nice and easy. Well done. Moving into the next bit. A business is reconciling its bank statement to its cash book. Now, I have super videos on the bank and cash book, bank reconciliation cash book. Little bit of lecturing. Listen from me. Cash book maintained by us, our accountant, like maintained by Natalia, maintained by Pizza Shop, owned by Holly, maintained by the Apple. Cash book maintained by the accountant. Bank statement being produced by the bank, isn't it? Yeah, being produced by the bank. Now, there are 2 things before I go through. One is unpresented check, one is outstanding lodgement. You need to know these 2 things, yeah? Unpresented check. Like checks I have written, given it to my supplier. I repeat, checks I have drawn, ripped it, the part of it, given it to my supplier. When I give any check to my supplier, in my cash book, I write, don't I? Or my accountant, he writes it. A cash book is a like debit side and credit side. Debit means money in, credit means money out in a cash book. Yeah, bank column. So whenever I give a check, I write on the credit side, don't I? Like supplier, I given a check of £100. I written it. That is, and outstanding. And whenever I receive a check from my customer, before going to the bank, I record in my cash book. Yeah, I record in my cash book. I received a check. At first, I record on my cash book debit side, maybe £200. Mr. T, I received a check. Then I go to the bank, don't I? I go to the bank. Now you see, 30th of May, I received a check or I given a check. Before going into the bank, I record on my cash book. But when I go to the bank takes 1 or 2 day time. That is called timing difference. Because of the timing difference, the transaction doesn't appear on the month of May. It appears next month. So to remember, this is called timing difference. Because of timing difference, bank reconciliation needed. So unpresented check is check given, and outstanding lodgement is check received. Both of these are recorded in the cash book. Would you remember? And these are highly important talkie. Unpresented check and outstanding lodgement recorded in the cash book, not in the bank statement. Yeah, in the next month it comes up, not in the month of May because of timing difference. So, and because we're going to talk about bank reconciliation, especially in the next question. So there are some bank items which our accountant doesn't know. For example, we receive online amount, online money. Would you know it these days also, although we get text messages and all, unless we check our bank statement, we don't know whether, especially like BACS transfer, like direct debit, standing order, bank charges, bank interest received, bank interest paid. Unless we check the bank statement, we don't know. So these are called bank items. So in a bank reconciliation, at first you need to update your cash book, then do the bank reconciliation. Okay, with that note, let's try to do this question here. What is being said here in this particular questions? Number B. Let's read it. Identify which one of the following statement is true regarding bank reconciliation. Did they say the balance on the bank statement will almost always agree with the balance of the cash book? This is not true. It will mostly different because of the timing difference and some of the items we don't know we do. So this is not the answer. There is often time delay between transaction being entered in the cash book and the statement balance per cash book balance. What do you think of it? This is a good answer, isn't it? There could be a difference, but let's read the outstanding lodgement is a check payment. No, I said received. Yeah, unpresented check is a check payment. Remember, outstanding lodgement check received and recorded in the cash book debit side. Yeah, you should write it down. Outstanding lodgement check received. Write it down. So this is the answer here. Number 2. I mean, in the middle one. True, false answers. Can we check it out? 1, 2, 3. Straight into the question. Comparing the debit side of the cash book to the amounts paid out in the bank statement will enable any automated payments that have been missed in the cash book to be identified. You see, you got to read the question very slowly. I'm going to read this question very slowly again for you. Comparing the debits, you see, when you do a cash book, a debit and a credit. Amounts paid out in the bank statement, and another one is bank statement. Cash book maintained by our accountant. Bank statement maintained by bank people. So in the bank statement, paid out in the bank statement will elaborate any automated payments that have been missed in the cash book. In the bank statement, unless we get the bank statement, we cannot write in the cash book. It is not automated. So this is false. Like bank charges. How can you write into the cash book automatically unless we see the bank statement? That is the question. Or direct debit, standing order, we need to see the bank statement. That is the question here. Next one. A direct debit 67, business's broadband connection is shown in the bank statement. This is not in the cash book. So this much need to be added in the reconciliation. what do you say? Of course, we need to write it down. Yeah, it is in the bank statement. We didn't write into the cash book, and we need to write on the credit side generally on the cash book. So this is true. The bank reconciliation statement means the whole process. Yeah, write it back. Direct debit, bank charges, and unpresented checks are example of timing difference. Partly true, partly wrong. Only unpresented check and outstanding lodgement is timing difference, not these two. So this is a wrong answer. Okay. So sometimes AAT tricks you, like they give partly true answers. Ah, that's the end of this question number 3. Well done. And we check the answer. Can we check the answer? I think this was the easiest to answer. And yeah, the timing difference was the best answer for bank reconciliation. And when coming to the true false, yeah, that is false. Yeah, because this is not automated. You need to bring it down like this, like this. Anything in the bank statement, it doesn't come automatically to your cash book. You need to see the bank statement and write it down, update your bank statement. And this was partly true, like this is true, but not this. So that's why it is a false answer. Brilliant. We have few more questions, which is a bank reconciliation straight again. I'd like to give you a little break here. What do you say? Yeah, because approximately 12-minute break. It's 10:48. We're going to see each other 11 o'clock. What do you say? Is that good? Yeah. See you at 11. And when we come back, we'll finish all the questions there. Bye for now. Yeah.